Has the US dollar now officially lost its edge? Let's find out by breaking all the key fundamentals down. Guys, Ken Chigbo back with an E8 Markets Fundamental Week Ahead update. Let's dive straight into this video. So the US dollar came under some pressure last week. Why? We observed lower inflation readings across the PPIs and CPIs. Remember, we were looking out for that in our last Week Ahead video. Now, we saw signs of disinflation. Now, remember, the dollar previously, before we look at everything, the dollar previously was holding edge versus a lot of its peers for a couple of reasons. One, because generally economic outperformance, data after data point previously was just solid from the United States in comparison to its peers. And then two, we had higher and sticky inflation. Inflation was just being stubborn. It wasn't coming down. Remember, we spoke about the economics behind why we see sticky inflation, but it just wasn't budging. But now there's signs of disinflation, right? And the only reason the FOMC, one of the key reasons actually, they were keeping rates higher for longer and not entertaining the idea of rate cuts was because of sticky inflation. But now we're seeing signs of that coming down. If you look here, last week we had the PPIs, remember the producers' prices. Now at plain sight, people are like, oh, the actual number came out higher. This is a dollar positive because inflation's higher and sticky. But no, okay, this is why you have to, when you're observing fundamentals, and it's very important to educate yourselves on this. When you're observing fundamentals, you look at the bigger picture. And if you look at the previous readings, they were revised lower, okay? Minus 0.1% on the core and minus 0.1% on the month-to-month reading there. So this is very important, okay? So overall, we are still seeing disinflation in process because those previous readings were a contraction. And when you balance things out over the annualized basis on over the bigger picture, inflation's still coming down, okay? Despite these initial readings coming in higher. And then also allied with that, we had weak retail sales. When you look at the retail sales here, look, 0.2% on the core, lower, much lower than the previous of 0.9. And then, of course, on the retail sales month for month there, 0%, much lower than expected and much lower than previous. And that, guys, is also disinflation. If we've got poor retail sales, i.e. consumers are not out spending to these retailers' sales, then of course that's disinflationary. Then eventually retail sales are going down. What do you think is going to happen to prices? Prices of goods and services is going to come down. Prices of these retailers, their price of their goods are going to come down. That's disinflationary. I hope that makes sense. Now, when you look at the dollar here, I've got the Dixie up here, starting off on a monthly. You can see how we've just been moving within this rising channel, subject to a breakout to the downside. So far on the monthly performance, we're in the red, okay, after potentially going to be snapping 1, 2, 3, 4, after 4 consecutive months to the upside. And when you look on the weekly here, you can see how we're just showing signs, trying to crack through and break through this ascending channel, which we could view as a potential bearish flag there. It does look vulnerable for the dollar. You can just see at the moment on the daily how we had that breakout. We're going for that sort of retest around that psychological area and that decent area of forward demand, obviously new supply around sort of 104.80 towards 105.00. So keep an eye on that, guys, okay? In terms of this week, we haven't got anything like loads of data, but there's various FOMC speakers. And remember, people are going to be listening very carefully to every single FOMC member now, okay? Because we're seeing disinflation. Markets want to hear that from the FOMC. They're acknowledging, okay, now we're really moving in the right direction and we could be entertaining multiple cuts, not just one, maybe 2, maybe even 3. The markets may get lucky and the stocks would obviously love that. Okay, so this is really, really important. And then, of course, markets are just looking for any excuse now to sell the dollar and pricing more rate cuts. So they want to see cracks in the economy, maybe through these manufacturing and services PMIs, the unemployment claims maybe ticks higher again. We get more people claiming unemployment benefits, which of course is also disinflationary, right? If we've got more people unemployed, it means less people out spending money. That's disinflationary. Price of goods and services should start to cool. So you want to keep an eye on these data, even the orange folders, such durable goods as well, guys. So dollar is still very much in focus this week. We also have the New Zealand dollar, which is in the spotlight this week because we have the RBNZ rate decision, so the central bank rate decision, and markets are generally expecting for them to keep rates unchanged. Now, if you look at my screen here, okay, RBNZ, as you can see, the official cash rate is expected to remain unchanged at 5%, okay? That's priced in, but it's what tone are they going to come out with the actual statement? And, you know, I have some sort of key points just after conducting a little bit of analysis myself, and obviously we've seen inflation start to come down in New Zealand, okay, it's decreasing steadily, but not at the pace of that's desired by policymakers. Despite positive signs such as cooling in the labour market and declining inflation expectations, I think the RBNZ are worried about persistent non-tradable inflation. So consequently, they are very unlikely to consider any rate cut this summer or autumn, maintaining its cash rate at 5.5%, which obviously would be beneficial for the New Zealand dollar if they do come out of that sort of pushback of any rate cut bets, given, the inflation's just not down at where they want to be seeing it right now, guys. Now, if you look at my screen here with obviously NZD versus the dollar, is having this opportunity to push to the upside now, just given obviously, as I say, the pullback in the dollar at present, given it's losing its edge. You could look at that as a potential big bullish flag. Either way, a descending sort of wedge, descending channel, getting a nice little breakout so far on the current monthly. As you can see there, decent monthly performance. On the weekly, you can see that extending out to the upside. I'm just going to remove that off the chart a minute, just to sort of clean things up and just show you what I'm observing here on the daily. Okay, as you can see on the daily, right, we broke out a bit of a narrowing pennant structure here, a narrowing range, which I managed to capitalize on last week. Nice little breakout there, extended to the upside. And you could even look at this, guys. Obviously, all technical analysis is subjective. You find what works for you, but you can see a bit of a pattern here, a left shoulder, a head, a right shoulder, and a breakout, and a sort of additional confluence with that pennant. And we had the breakout of that neckline area there and pushing to the upside. So if you probably drop this down to the 4 hour, you can just see we're getting ourselves comfortable at this 6100 zone, potentially making way for some further upside pressure, so long as obviously the dollar remains on the back foot this week, as I explained it earlier. But then also as long as we get that pushback from the RBNZ on potential rate cuts, not until later, much later on this year, maybe even early 2025, that would be obviously bullish for NZD. We also want to keep an eye this week on GDP fundamentals. Now, you would have seen of late, there's quite a lot of volatility right now around the pound because markets are trying to suss and price in any expectation of an incoming rate cut from the Bank of England. And they've been hinting at these cuts to come because they see inflation sharply falling. Now, with that being said, this week, if you look here on Wednesday, okay, ahead of Wednesday, actually, you've got the Bank of England Governor Bailey speaking. So it'll be interesting to see what he says. At the most recent decision, remember, they were dovish. Okay, they were dovish. We're expecting year-on-year inflation to cool down very closely towards the Bank of England's target, 2.1%. Now, let me make something very much clear. This is pretty much priced in, okay? If we see that coming down around those expectations, I don't expect much of a much weakness in the pound because markets are pricing that in. Remember, the Bank of England governor last month even told us that he sees inflation falling sharply this month. So that's pretty much priced in. So I think the odds are potentially in favor, potentially for the GDP bulls, especially if we get decent manufacturing and services PMI data, right, which expected decent, still expected to push. Well, if we look at the services, the big number, because that makes up over 70% of the UK's GDP. All right, that's expected to remain well and truly in expansionary territory. Remember, anything above 50 is expansionary territory. And it will keep an eye on this manufacturing PMI, see if that can push back into that expansionary territory above that 50 mark, which would also be supportive of pound strength and obviously retail sales as well. But markets are just trying to further price in that, rate cut expectations, maybe even more. If inflation falls more than expected, then that could invite some pound weakness. But if it doesn't, then I think pound still has a decent shot, potentially more so against the dollar, okay? I'm speaking about against the dollar here, taking advantage of the dollar weakness, dollar really losing its edge, and markets obviously having already priced this potentially bearish scenario in for pound versus dollar. Maybe there may still be some opportunities. If you look at other currencies, right? If we're getting the pound loses edge against quicker in comparison to the euro or in comparison to Aussie dollar or NZD, for example, right? Likes of GP Aussie could be falling faster. GP NZD could be falling faster in comparison to G, which may hold some ground because the dollar's losing its edge. Hope you understand that, okay? Understanding those, that divergence there. Now, if you look at GU specifically, same thing as I've noted with NZD. We're getting this decent monthly performance so far, okay? On the weekly there, finishing in the green, decent push to the upside, breaking out of a bit of, you can mark this up as a channel if you put another trend line here. We had a breakout, a retest, and now pushing to the upside. We're making ourselves comfortable at this zone, okay? This zone, when I'm talking about this zone, I'm talking 127.00 towards sort of 126.50, 40 area, okay? And we sort of broke out a bit of a flag there, pushed to the upside. So long as this zone holds, this has opportunity to push to the north. I'd say GU taking advantage of this dollar weakness as well. We could see this challenging these highs of last month in towards sort of 28.50 territory. Those are actually the highs so far of 2024 as well. So there's no reason as to why we couldn't potentially challenge those highs. So long as the fundamentals support it, as I say, keep an eye on these PMIs, retail sales, and obviously on that CPI this week. And very lastly, we have more inflation data, but this time coming from Canada. It's really important right now to observe all inflationary data points for a lot of these major economies. Why? Because we're trying to figure out which central bank is going to be active, okay, with regards to rate cuts. The only way we get those rate cuts is if inflation is cooling quickly, close towards the central bank's targets, right? Most of these major central banks want inflation down on an annualized basis around that 2% figure, okay? So we're going to keep an eye on these Canadian CPI numbers, which inflation, as you can see across the board, is expected to cool sharply, right? And depending on how sharply this cools, right, in terms of if it cools quicker than expectations, faster than what the markets are expecting, that could really ramp up expectations for a rate cut from the Bank of Canada next month as opposed to July. Okay, so depending on how sharply these fall, okay, if they fall quicker than what these markets are expecting, that will dictate in terms of CAD weakness, all right, or CAD strength across certain pairs. Remember, as I said previously as well, you really want to pick your pairs wisely, maybe not necessarily dollar CAD because of the volatility that we're dealing with and the edge that was being lost at the moment with the dollar, but picking your pairs, maybe Euro CAD or, you know, CAD Yen or GBP CAD, okay? You just conduct that analysis, see which currency is more likely to lose edge quickest, okay? Or which currency is more likely to hold edge versus its peers, depending on those incoming rate cuts from central bank.
So that's most of the key highlights to be aware of this week. We're definitely in for a decent amount of volatility across the majors for sure. That's it from me. Have a blessed trading week. I'll see you on the next video.